Well, it is time now for Trading Nation because traders do trade better together. Let us dive and trade into this broad market slide. Jonathan Krinsky, a technician with MKM Partners, Boris Schlossberg, macro trader with BK Asset Management. Jonathan, I will begin with you. We are still up year to date, about 5% on the S&P 500 today. Obviously, not a good day. Does today change the technical trajectory of the stock market at all?
You know, from our perspective, it doesn't change the big picture. It doesn't feel good today. There's not many places to hide. We have a 90% down day, so 90% of all volume in the S&P right now is in declining stocks. That is a distributive pattern, but it is just one day. So let's take a step back, kind of look at the big picture here. S&P 500, it's testing that uptrend line from the February lows through the Brexit lows. That comes in around 2135. If we break that to the downside, you're probably looking at a test of 2120. That's the September lows as well as that big resistance area that we broke out of in July. So it was prior resistance. We think it probably acts as decent support should we get down there. A couple other things to think about. Seasonally, we are approaching the end of the seasonal week pattern. It does become a tailwind, although we are in an election year, which tends to be a little bit weaker. If you go back to 2012, the last election year, we saw the market sell off into mid-November. So seasonally, we could see a little more weakness. And then the other thing to realize is that, again, it's a market of stocks, so you have to look at different sectors. Over the last 3 months, the S&P is about flat, but some of the cyclical areas, namely technology, industrials, and energy, and financials have done very well, and the high dividend sectors, the REITs, telecom, utilities, have actually been down double digits over the last 3 months. So we think the overall market continues to find its footing here, but it's really a sector and stock story at this point.
Okay, Boris, let's talk about something that you're primarily familiar with, which is the dollar. How much of the dollar's recent strength, if at all, is responsible for the stock market slide?
Well, dollar's recent strength, I think, is having an impact, but that's because I think the real story here, obviously yields definitely having an impact, and that's creating a little bit of profit taking in the stocks. And I do think, by the way, 2100 beckons on the S&P, maybe even 2000 if we get very, very serious. But I think the other unknown here is geopolitical stress. What's happening in my market right now, for example, is that the British pound is completely imploding today, again, based upon these Brexit fears. And I think the market right now, investors are looking at the landscape. The election, although it looks like it's tilting towards Hillary Clinton, is uncertain. And of course, Donald Trump is the single most volatile, uncertain candidate we've had in years. And I think investors may be thinking, I'm going to take my ball, go home until this thing is over, and come back. Basically, if they can lock in the 5% for the year and just walk away until the volatility goes away, that may be happening. So I think the worst may not be over yet, especially if we see Trump begin to bounce in the polls. I think it's going to create much more volatility in equities because investors are very fearful of the agenda that he brings to the table.
And Boris, specifically on currencies, where do you see the dollar index trading? I mean, some people say that it will be capped. I'm just wondering how much of a rise, given that we've seen it move 1% this week alone, and it's only Tuesday?
It's not by any means the end of the rally in a dollar index. The market is starting to understand that the Fed is on a path to hike rates. We're going to have a divergence in monetary policy, and I think that's going to push the dollar even further higher as we go forward, especially against everybody else who seems to be either stationary or trying to.
So what level by when, Boris?
Well, I think we have probably another maybe 2-3% before the end of the year in a dollar index very easily. It depends against which currencies we're talking about. As far as dollar yen goes, for example, I think it's reasonable for us to see maybe 107, 108 dollar yen before the end of the year.
Wow.
All right. Hey, Boris and Jonathan, thank you very much.
Thank you.
We'll see you in a bit because we're going to be taping 2 other segments right after this show. We do it every day, and you can see them at tradingnation.cnbc.com.
Biotech stocks can be quite volatile. So, when trading this group, it's important to explore and consider a company's pipeline of drugs as well as their schedule for research and development. Those results can often have a dramatic effect on price action.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.